Welcome to Market Day Report. Welcome to a Thursday. I'm Tony. Glad you're with us this morning. We've got a busy morning, and we'll jump in with Brian Hoops in just a moment to help break down some export numbers. First off, let's see how we traded in the overnight session, and we'll start with the corn market. Higher, up 3 3/4 on the December at 422 3/4. All deferred contracts were higher. For soybeans, same story. And look at that. Every contract on the screen now with a 10 handle or better. 10.10 on the November, up 12.5. What about the wheat market? Well, we saw strength in Chicago. Front month at 579 1/4, up 3/4 of a penny. July, the new crop was higher. Hard red was lower, though, on the D's, down a half penny at 585, and new crop half penny lower at 617. In Minneapolis, wheat mixed up 2 on the December, while a half cent lower on the May contract. And then in New York, cotton futures in the red, 72.17 on the December, off 34. Now, USDA out with the weekly export sales numbers, and flash sales reported as well. That gives us a great opportunity to throw it to the president of Midwest Market Solutions, Brian Hoops. Brian, what are you seeing?
Well, good morning, Tony. Yeah, seeing a lot of export business in the last several weeks. And, we've talked with clients about, this big crop that's coming on in the U.S. and rains in South America, but the market's always looking towards what's new to trade for this day. What price direction are we going to take on because of export business news or news sales or whatever it is? And we have a lot of export business over the last several weeks. So the export sales that were out this morning, as of last week, it was a 3.5-year high in corn, 141 million bushels for this marketing season, and then another 22.9 for next year. Mexico's the biggest buyer of that, of over 66 million bushels, and that unknown destination is a buyer of 45 million bushels of that corn. And that may not all end up being Mexico. It could be some other countries, but I think a lot of that unknown is going to be Mexico as well. Now, China bought 47 million bushels of soybeans last week, and overall our sales were 79 million bushels. So these are some great numbers. Wheat sales were good as well at 19.6, not anything like corn and beans outstanding, but a good number, standalone number there. Now, we also had some private export sale announcements. We've had private sales every day this week, and our sales this morning were 227,000 corn to Japan, another 165,000 corn to an unknown destination, and 198,000 soybeans to an unknown destination. So again, some real outstanding numbers. I think it catches the trade attention. In fact, when these were out at 7:30, we rallied into the 745 close off of these export numbers. So we've traded a lot of the export numbers, but now we have these private export sales to put on top of it. It's going to give us probably some more technical strength. And we went over the last 2 weeks, a lot of days lower, 7 out of 10 days lower for corn and soybeans. Well, we're reversing that now. We've traded 4 out of the last 5 days higher in both corn and soybeans.
So, Brian, as I look, again, we have export sales, then we have export shipments. So the idea is you buy it and then you take delivery. Looking at corn, 99% higher, according to the weekly export sales numbers, than the previous week. That for corn. For soybeans, up 32% on the shipments, 30% higher on the wheat shipments, and 70% higher on the cotton shipments. So they're not just buying, they're taking delivery.
Yeah, that's the thing here is to keep in mind is you have these export sales that come out today. Now, these are sales being made, and they're being made for future delivery periods. So right now, China definitely needs some soybeans. They probably need some corn as well, but soybeans they're taking it in because they've ran out of the South American supplies, and there's not a new crop available. So watch your inspections numbers on Monday. That'll tell you how much product is actually leaving ports in the U.S. and headed out on ships. That's really the key number. But these sales, this is what attracts a lot of the trade attention. Now, these sales are for most likely for January, February, March delivery. In a lot of cases, they can be canceled at some point down the road. But yes, the shipments are what's really key. If we are making the sales and shipping it out of the country, that's when we know we've got, we can put that on our books.
All right, we've had a lot to talk about when it comes to row crops. We've got a lot to talk about when it comes to livestock. Hang on, Brian Hoops will join us in the next segment. Market Day Report continues after this. So USDA will roll out a cattle on feed report. It comes out at 2 p.m. Central Time tomorrow. And we'll open up the markets in just a moment with some export news. But first off, how did we finish off the session yesterday? Well, live cattle futures finished in the red. October at 187.62, down 42. Still waiting for cash cattle really to develop this week. December 187.87, it was off 25 cents. Now for feeders, down 85 on the front month at 248.57, $1.70 lower on November at 247.22. And the hog trade on Wednesday was higher nearly across the board. December at 80.17, up $1.05. Let's bring back in Brian Hoops, Midwest Market Solutions. Again, we referenced earlier the weekly export sales report from USDA, and when I look at the numbers for beef, looked pretty good, but maybe a step backwards for hogs.
Yeah, that's a good way to phrase it. We had a really strong week last week for hog sales, pork sales. Not so strong this week, although it's pretty much where we have been over the last 5, 6, 7, 8 weeks. Pork sales were 22.2 million tons, shipments over 32. Beef sales 16.7, shipments at 16.1 million tons. Really close to what we've been seeing. So I don't think the markets get any reaction out of either these beef or pork numbers. They're just not much of an event, unlike the grain markets were. Of course, hog market broke out to the upside yesterday. Following the index higher, we're narrowing that spread. We're also seeing a lot of technical buying coming into this hog market, and that's very bullish for hogs. Now we're going to get close to some resistance on the charts, and that will limit the advance, but that's another $2, $3 higher than where we're currently trading. The cattle market kind of faded some of that early session weakness yesterday, rallied, closed back middle of the range, still looking for a cash trade to develop. It looks like the feedlots have the upper hand this week with strong packer margins, cutouts that are pretty much steady to higher, and the cash trade is probably going to be $1 to $2 better once we get there. And that may not occur until tomorrow because we do have that cattle on feed that comes out after the close, and that's another piece of bullish ammunition there. That the report, if it comes in near expectations, looks to be friendly for the industry.
All right, Brian, so glad you're here with us this morning. As a matter of fact, so glad, how about I invite you back and join us in the morning at 8:15. Brian Hoops is with Midwest Market Solutions, and again, we're preparing for what could be a pretty interesting day with really strong export numbers